Hello and welcome to Growth and Value Stocks. My name is James Boyd. We welcome you on this January 14th, 2026. We welcome you again if this is your first time, and also if you're a returning user, welcome back. Now, just real quick, we also have Connie Hill in the chat. We welcome her. And if you have any questions, just know you'll see her initials as CH. Debbie, how are you doing? And I did respond back to your YouTube comment there. I'm sad to hear about that. Hopefully, day by day, it's feeling a little bit better. PR 451, Will, Bill, Grace, Silas, and many others. Good morning to you. Let's go ahead and hop right in. Now, remember, Connie and myself, all of us instructors, we do post educational content on X. There's my handle at James Boyd CS. Connie will post hers in the chat. That way you can just link directly to it and follow her. Now, just real quick as we get going, remember that with what we discuss, it's done for, I'll share information. It's provided for general informational purposes only. Should not be considered an individualized recommendation. Also, Schwab does not recommend the use of technical analysis as a sole means of research. It's interesting, okay? It's probably the easiest way to kind of see what's happening. But that technical analysis might not be telling the whole entire story. Other things like fundamental analysis, intermarket analysis can complement. They could all work together to kind of really paint a picture of what's happening with that stock and company. Also understand that the paper money software application is for educational purposes, and also investing in stocks involves risk, including loss of principal. And today what I want to do is I want to kind of talk about the last couple of weeks we spent some time talking about sample plans. Today, since we're not talking about a sample plan, we want to kind of talk about some of the past examples that we've discussed and traded, and I want to talk about those. So this will truly be more of like a trading class than going over a sample plan. It will be actually really the execution of that sample plan of a trend, of a swing trade, and so on. Now, just real quick, I want to hop in. I want to talk about markets just briefly, and then we're going to look into some examples. So first thing, when we woke up to here today, we actually did see the VIX actually push up. Now, remember, the VIX has been sitting down here right around, let's say, 15-ish or so. Today, pushed up a little bit. Now, we know if the VIX actually goes to the upside, okay, if we get that VIX to go up, we actually know that stocks will probably try to push down, or at least some of the stocks will push down. Things in the area like, say, technology, okay, things like in the area of, let's say, discretionaries, those are two sectors we're probably very mindful of in terms of that those could actually go down more than probably what the index could actually do. So that's the risk, okay? So whenever we see that VIX actually start to pop up, these two sectors stand out immediately. So the investor would be asking themselves, do I own any stocks in technology and discretionary? And are there any examples of where there could be stop adjustments or manual exits, all of the above, okay? And also adhering to the rule set that we actually discussed, and we'll show those examples. Now, to that comment, if I say technology, I'm obviously saying NASDAQ. If I actually say NASDAQ, I'm probably also saying SOX, the semiconductors. When we look at these four indices, NASDAQ, SOX, S&P 500, Russell, and Dow Jones, which of those four are down the worst? It's the ones we just mentioned, NASDAQ and actually SOX itself. So we're not actually seeing a push. This weakness, relative weakness we've seen in the NASDAQ has continued. That breakout has not, it hasn't pushed up higher. And actually today it's faltering. And we actually see it actually pushing down on the 10-week moving, on the 10-whole moving average, we see red and 1. Red meaning the color of the moving average, 1 representing the number of days the moving average has been red, okay? Now, if we actually show, this is what's so interesting is the Russell is barely down. It's only down 0.1%. The Dow Jones itself down 0.5%. So this is where not everything is the same, okay? You can't just take a big fat brush and say everything's the same. That might be the case if you're getting into the depths of a hard sell-off, but if we're just starting to pull back or consolidating, there's going to be some differences. Now, you're going to notice that has probably poked you in the eye this morning. This has probably poked you in the eye this morning on that line right there. Those shiny objects have continued to be shiny. Now, I want to kind of pull up just real quick, just what do these look like, okay? Well, let's pull them up. SPX, what does it look like? Now you got to remember my whole moving averages, they are shorter term. I mean, they are a weighted moving average and they're going to follow the price very, very closely. And that's what it looks like. Now, if I pull this up, let's say, and I'm going to show you all of them, okay? When I look at the NASDAQ, what does it look like? And it looks like it broke down. And it looks like there's that one-day whole moving average. What does the Dow Jones look like? You're going to see that it also in the last one day kind of went red. And what you're now going to see is it's almost crossing. Now, remember, if we talk about selling, okay, some investors might use that red line on the 10-period moving average as the first sign to consider selling. Second sign actually might be a crossover and or the moving average, the 20 going red. This is at least showing the first and now starting to pinch, so it's almost going into two. So it's getting more confirmation of that selling. Now, selling is a part of it, right? If you looked at the Russell, we don't even have one yet, but we do have kind of some pushing down, meaning the price is actually below the 10-period moving average. So if we're talking about momentum here, this morning we're actually kind of seeing a stalling, a pullback of momentum. Now you pull, but you stall, you actually have momentum. Cool. You actually, for example, actually see that there can be risk of a consolidation and or pullback. Now, just to be fair, okay, when we look at these prices, kind of with moving averages that are not as high, the 10-day exponential moving average, we're not even there on the Russell. Okay, remember the whole moving averages can kind of make it look a little bit more egregious, but if you look at the 10-day exponential, not a whole lot there as far as the Russell, as far as showing weakness. Go back to the NASDAQ just for a sec. What does that look like? Well, it's kind of sitting right on this 30-period moving average, the red line, still being the weakest so far. Dow Jones itself, what does that look like? Why is the color of the candle purple? Well, the color of the candle is purple because the price is falling down below the shorter-term moving average, which is the proxy for momentum. Shouldn't be surprising because we just talked about that, okay? So, I mean, would we say that it's an intermediate pullback? Can't say that yet. I mean, short-term, okay? But we can't really say that it's, oh, man, changing the direction of trend here, okay? And if you look at, let's say, the SPX and say, what does that look like? That also looks like it's gotten down below the 10. Now, what you're now going to notice is the last two times we've actually had a dip, or the last time we had a dip, we fell down below that 10-period moving average for 2 days where the candles were purple, and then we bounced it back up again. So sometimes investors will use these orange or purple color candles to try to buy a shallow dip. The problem is you never know how deep the pullback's going to be. You're looking to actually kind of see how well, when the market actually falls down, how well is the market holding up? Are we still seeing those more higher beta areas still holding stronger? If we get the NASDAQ to go down harder, stocks to go down harder, technology to go down harder, discretionary to go down harder, it becomes harder and harder for the market to hold those shorter-term supports. And if that's the case, then you don't get orange and purple colored candles, you get red. And those red colored candles are saying, look, the price is being flushed below the 10 and the 30, which means we're actually entering more of a deeper pullback. Now, that doesn't really matter a whole lot if you have a stop. So if the index is pushing down more, it just says the likelihood or the probability of being stopped out becomes higher. Okay, are there any questions with that? Someone actually said, did you just call me a dip? No, we were talking about the price. No, that's funny. I always like, you guys are funny. You guys keep me on my toes. Okay, now, just real quick, I want to look fast fire through a couple sectors, and we're going to spend the rest of the time on past examples, new examples. IX, now this is what's kind of interesting, okay? Now, sometimes it's hard for people because when they look at one thing, they think, well, everything is like that. No, that's not true. So sometimes the areas that have been hot, they start to cool, and some of the areas that were not as hot, they start to strengthen. That is also called rotation, okay? They're switching what they're buying. Now, one of the areas that doesn't look like it's been that weak, at least today, is really the IXE. When you look at the IXE, the energy sector, you look at crude oil itself, crude oil, it's actually been the first time we've actually gotten above really that 30-period moving average, okay? Now, we're not saying crude's at 90, okay? But crude's actually had a decent push as well here. Now, the other one we actually want to kind of pull up is the consumer staples. And man, you feel bad. I mean, in a way, the staples, if you like, let's say, these value/income areas, most of them are not growth, but that move has poked many investors in the eyes. Beware. This is why people wear glasses, okay? That movement has been very strong. Another example of slicing and carving its way through the old channel. And where are the bears? The problem is nobody wants to step in front of the 18-wheeler here, okay? Now, if we take a look at this, we pull up, let's say, IXB, that actually hit a brand new high. That's not a real big surprise. And if we actually just change this to an I, you're going to see that that one actually was a brand new high as of yesterday. So those are kind of the four that are actually being a little stronger right now. Now, the comment really came in on INTC, saying, hey, wow. Well, if you could go back and look in the chat when we actually talked about that, many people saying, I'm going to look at something else, I'm going to look at something else, I'm going to look at something else. Well, you could go look at something else, or you could just actually follow the trend, okay? That one has actually been, I'm talking in the last, let's say, 4 days, okay? I mean, who's counting? But if you look in the last, let's say, 4 days, when we're down right there, that movement right there has been 17% in the last 3 trading days, okay? And this is on a daily chart, for crying out loud, okay? So I don't know. I mean, it just kind of depends on what your goal is. Some people are trying to ride trends. Other people, well, they like to look at the charts and not follow their sample plans, okay? So it's kind of up to you what you want to do. Now, our job, so think of it as a job, right? Our focus is we're trying to look for some stocks that really match the plan that we talked about, the trend trade plan, the swing trade plan, and our focus is we want to adhere to those sample plans. Now, let's talk about this, okay? Now, just real quick before we go forward, one of the ones that actually we had to, you'll see that this just right before we got on, okay? We did an example of PM. Now, PM, we would not really say it's a growth stock per se. You would probably say to some respects, it's maybe a little bit more value, maybe a little bit more income-ish, dividend-like. Now, remember, dividends are not guaranteed. They can change the dividend policy. But if we take a look at this, you're thinking, oh, it's a stop. No, that was actually a target, okay? So when up to the target price, that's the price it sold at. Let's just go back and kind of just see what this looked like. So we're going to go right there, okay? And we want to go back and kind of say, when was this trade placed? Where was the stop? And we can see the beginning and the end, right? So on the 22nd there, at that time, there's the shares that were purchased, 160.07. Now I want to show you this, that the stop to the downside was at 153.49. Why am I bringing that up? Well, because we got within pennies of actually that. Now notice this, I can't refabricate this. This is actually timestamped based upon the date that it was placed. So if we went back to that chart just briefly and said, how low did that get? Well, it actually got to, the low was about 153.71. So we were within 22 cents of being stopped out, which, by the way, that's not unusual. Sometimes, you can get almost stopped out. That's my point. And then it pushed to the upside. That push to the upside, now you're kind of thinking, well, why didn't it just go up to the upside? I know exactly how you feel, okay? It kind of took a little pullback first, made the investor sweat, okay? And then it pushed up, and that's what it hit the target. If we go back to the 22nd and say, what did that look like when the trade was placed, and what type of setup was that? Well, that looks like a horizontal breakout there. For the couple days, it looked decent, and then it yanked back, almost stopped out within 22 cents, and then it went to the target. So that trade, if we go back and say on 75 shares of stock, and we actually had, in this case, about $9 difference. So about 75 shares times $9, 75, okay, times 9. You're going to see that, do the math on that. I'm going to say it's about 680-ish, somewhere in that ballpark, okay? So that hit the target. Now, let's go back and look at some of these others just really quick. So when we go back to the activity and positions, what I want to do is I want to kind of pull up some that are kind of showing some weakness. So if we looked at this and said, are there any stocks that are showing some weakness? The answer is yes. So one of the labels that I like on the monitor page, activity and positions, is this 10H, 10 halt counter. This is telling us, hey, one of the stocks that's really showing red lines on the moving averages is NVIDIA. And it's showing, but we want to verify that this is really showing that the moving average has been red for the last 5 days, and that moving average, the 20, has been red for 5 days. What does that tell us about momentum and trend? They ain't great, okay? Now, if we went back to this for just a moment and we typed in NVDA and we said, show me what you look like, let's verify, is that script showing it accurately? Well, and if you look at this, this is day 1, this is day 2, this is day 3, this is day 4, this is day 5. That actually looks like it's accurate in terms of it's actually showing us that the moving averages are red. You got the 10 right there, you got the 20 right there. And the question we got to ask ourselves is it showing a sell signal? Now, part of the scripts that I like is the scripts that are on the chart. So with that actually idea, we want to go back. Let's go to the very next chart. And what I want to do is I want to look at using the 8 or 10-day lows. Now, we cannot say language like, no, you never said this before, I don't remember that. This is kind of the nice thing about, let's say, using scripts on the chart. Now, this script on the chart is plotting an 8-day low, thus represented by the white line. The red line there is the 10-day low, and the yellow line right there represents the 20-day low. Now, if you said, I don't know that, how would I know that? Well, when in doubt, right-click, and if you right-click on that, it'll tell you it's the 8-day low. So the 8-day low represents, if someone is moving up a stop, they actually might say that's maybe the tightest stop I'd probably set. If someone said, I like the 10-day low, how would I know that? Well, if I right-click on it, you're going to see that it will show the 10, okay? And you're going to see, and there it is. And if I did that, what you're now going to see a days back is 10. That's just going to be a little bit looser because it's giving you more duration of time. And then the 20 obviously is way down here. Right-click on it, edit the study. You could confirm 20. Okay, there it is. Now, what we're going to ask ourselves is, did we do a good job or a poor job? And if we did a crummy job, just call it what it is, okay? Now, what I'm going to do is we're going to look and see. Now, first off, we know we're in trouble on this, okay? When these lines go red, this is not it's not nice, okay? This is where you get sad face. Because now all of a sudden we're like, man, I don't have momentum at my back, and now I'm riding into the wind of a bearish trend. This is not probably a recipe for, like, say, oh, this is probably going to go up. Now, the problem is we don't know the future. So that's why some investors set stops, if they did. And now we're going to see where should the trigger be and what maybe the investor might consider now. So if we actually looked at this and said, where was the first sign of exit, it was really right there. If the line ever turns down like that, that actually is saying that the stop should have been violated, penetrated is the word, and the investor is not moving stops down. So if someone used an 8-day low, that stop was probably right at 186. Now, if the investor said, no, I was using that 10-day low, it's probably right around high 183. Let's go to the next day. We go to the very next day, and what do you notice? Right around about 183.70, that actually hit the white line. Now, I just got to ask you a question, okay? Can you visually see the stops now? Can you visually see where they've been penetrated and ask yourself, why is the trade still on? Okay? Now, we go forward to the very next day, and if we said the 10-day low, the 10-day low didn't really change day over day, and we go forward to the very next day. The problem is now these lines are turned down. And if the lines are turned down, what does that tell us? It means that the 8-day or 10-day low is getting lower over time. Does that mean bullish? Doubtful. Now, here's the problem. We go forward to this day, and what's the point we want to bring out? The point we want to bring out is that this should have already been triggered out. Okay? Now, by the way, if we went back to this and said, where should have been triggered out? Should have been really triggered out at 183.74. Okay. And now we're about $2.30 lower than that. And so that actually means the loss is even worse. Now, we're not saying language like, I like the company. I think it could do really good. I hope it does really good. That has nothing to do with technical analysis. Okay? So what we're now going to go ahead and do is going to go to the monitor tab. We're going to go right here. Right now, by the way, if that position, okay, if we're late by about $2.20 on 100 shares, that actually means that the loss is actually bigger by probably about $220. Can't blame the market. Have to blame the investor. Wasn't paying attention, right? Now, what I'm going to do is going to right click on this, create closing order, and then sell. Now, this would be a really good part of a routine and say, look, every night or in the morning, you actually are moving up those stops. I'll show you that in just a moment. And just being diligent and also routine based on a sample plan. We're going to create closing order, sell. And what you're now going to notice is that's going to lock in that loss if the trade were to fill. Now that loss, I can't bring this up, but I'm talking about the stock. The stock has a loss of $589. And what you're now going to notice is we're going to click on that right there. We're going to go to the mid price and try to sell it. Now, if you're watching, you probably say, James, there's something else there where the loss is not as severe. Noted, but it doesn't negate what I just said, okay? So I wanted to follow that through. Now, I wonder if you actually said, James, what about on a position like Google, okay? Now, remember, Google, this is the opposite, right? Where the investor's trying to ride the momentum, 10, trying to ride the trend, 20, and they're trying to get the stocks to go up. Okay, now all the trades were placed with the idea that they could go up, but the problem is you didn't know the outcome. Okay, now let's just go double check where might that stop be on Google. Well, and before we look at the new positions, and I want to do that on Akamai as well. Now I'm going to kind of show you how fast we can kind of do this. I'm going to go to Google for just a moment. Okay, Google, and I'll share that chart. So if we were to look at Google and say, hey, you know what? I want to move up my stop. Well, whether we use an 8 or 10-day low, they are the same. So that stop would really be right around 310. That's if you're using days low. The one thing that we're going to notice is, man, that is pretty far away from where the stop is. Excuse me, the support is. If you said, look, that seems a little low, some investors here, they might say, James, I'm going to move up that stop a little tighter underneath the moving average. Noted. Okay. Now I'm just typing an artificial number because I'm going to move it up here in just a sec. But there's the stop. Now what you're going to notice if I go confirm and send, it's going to actually set this. And I'm going to move it. Dadgummit, it's closer than I thought. So it's now sitting right there. Now, here's the thing. If the investor cannot move up stops based upon visual scripts, man, what are we doing? Okay, what are we doing here? And so the biggest actually thing is if we're setting the stop off the visual scripts there it is. If someone said, James, I want to set the stop underneath the moving average, well, we can see where that is, less 2%. The thing that would be really nice on this is when we have stocks that run up like this, just a couple of days of consolidation, and then if we went up, the stop could move up a lot, but we need that shallow consolidation. Okay, we need days to go by where when we look back 8 or 10 days, that it increases. Example given is right in here. When we had a pull, right? What did we really need? We needed a couple days where we just kind of consolidate. And look how steep the 8 or 10-day lows moved up in that consolidation. Well, that's pretty much what we're trying to get here. We're trying to get that consolidation that we saw here to now happen over here. Why? Well, because that could actually allow the stops to be moved up more aggressively. Now, just really quick before we look at our first example, I want to also go back to one other one, the Akamai. Pull that up. Where is it at? Now, if we pull this up, now here's the thing. Did we mistrade this in any way? Now, if you take a look at this, this kind of makes us believe that we mistraded this. Why are we saying that? Well, because if you look at this, we got so close to the target. We're at $94. And if we look at this, we're at $95. So what was the reward remaining? Now, here's the thing. Sometimes we don't take responsibility, right? Or the market didn't give us opportunities. The market gave us an opportunity. The question is, was the investor paying attention? The biggest thing is we were $1 away from the target. So that was the reward remaining. Now, if we actually went down and said, okay, if we were at $94, which was where we were at the high, and if we look at down where the stop was, let's just say the stop was at 85. So what does that tell us? What's that reward to risk that I keep talking about? Well, it actually means if you were at 94 and the stop was at 85-ish, you're trying to make $1 and the risk potentially is 9 or more. The stop does not guarantee the exact fill, okay? But what this actually really means is where should the stop have been if we were doing a 1-to-1 reward risk ratio? Well, if we ever realize that that reward is 1 and the risk is 4, the investor might say, look, I'm going to choke the stops to where I'm going to try to make the remaining dollar, but only give $1 back from the high, not from where you see it, from the high. So that actually means that this trade should have been stopped out somewhere probably right in here at 93 if you were actually saying, hey, look, James, I saw the stock at 94. I had a target at 95, and I'm trying to get that last dollar, and therefore I'm only going to try to give $1 back to try to lock in those potential gains. So now what are we realizing now? Well, I missed the opportunity, okay? These are great things to do at night, in the morning, when the market's closed, etc., and watch these and move orders. This is a second example where we've seen where it was mistraded, okay? In other words, where the investor would be, let's say, not really following the sample plan that we discussed in the swing or the trend plan. Now, so on this one right here, now option number 1, if we recognized, you know what, this trade should have already been out by now, the investor might say, look, the gain could have been bigger, noted, okay? But they might say, look, I didn't do my job. The investor says, I'm going to watch for it again. I still got my target at 95, but if I see that again, I'm going to try to move it up like I should have done per the sample plan, okay? So, or option number 2 is the investor might say, look, I'm just going to sell now because I already should have been out. Now, this is where I want to just follow through on what we talked about in those sample plans, okay? Now, what I want to do is I want to just real quick, the comment is, what does the yellow line represent? Well, how would you find out? Well, right-click on it. When in doubt, right-click. And now when you go to that top line right there, it's going to say Edit. And if you just put your cursor on there, you will see it's plotting the 20-day low. Why are there different durations of time? Because not all of us are trading the same length of time. Some are short-term, white line. Some are more intermediate, red line. Some are a little bit more intermediate to long-term, yellow line, okay? Yeah, now comment is actually from Sia, is JB might have been better if we put a trailing stop. I'm just going to tell you, I don't do trailing stops. We are the trailing stop, meaning what that really means is we're visually looking at these, and if we said, hey, I'm going to move this up, to move up the trailing stop, how long does that really take to move it up? The answer is not very long. So I'm trying to use a class to practice execution of the plan. If we did the trailing stop, then what it's going to do, yes, it could have been, I want to kind of help you see it in class, okay? But if you ask me, do I like trailing stops? Not for classes. If you actually said, and the problem with the trailing stop in this case is the reward would be changing the higher we went to the target. So that trailing stop would not always be the same. That's the problem with the trailing stop on a reward to risk, okay? So why I just said why no trailing stops, because I'm trying to use it as a class example. Why no trailing stops on this? Because if we went to 94.5, the trailing stop amount would change, okay? So let's imagine you had 12 positions and you said, hey, one of them is getting very close to the target. Well, you're probably watching that one, okay? You sure hope you are, okay? All right, now let's go back. Let's kind of talk about new positions for the last 15 minutes. Now, what I want to do is I want to go back to just real quick. So, by the way, does that help you get application what we talked about as far as targets, looking at a past trade, stop adjustment, target stop adjustment, failures? How do you fix those failures? If you see holes in what you were doing, then it goes back to like, what do I need to do in my routine to stop that, okay, from happening over and over again? Now, what I want to do is I want to go back to just real quick. When we look at stocks, so CVX, if we go back to this, and by the way, there's a question based upon, can I get those charts? Let's do this. I'm going to go ahead and share the grid, okay? So this grid is very important. Think of the grid as tools in the toolbox. Different tools are helpful at different times, okay? So I don't want all those tools on at one time. I just don't, okay? Now, one of the stocks, and we're not going to do this one, but we're going to try to pick one like this. Now, with crude oil going to the upside, of course, we actually see Chevron moving to the upside, okay? Chevron's going up, Exxon's going up. And actually, if you look at Exxon, it's squirted above the area of resistance. And I just want to kind of take a look at, are there any other stocks in there that might be trying to get a push as well? Now, Chevron and Exxon really actually have an earnings closer than FANG. If I brought up, let's say, what about PSX? Okay. Which, by the way, let's hold on to that thought for just a sec. What about like something like Valero? Okay. What about something like Oxy? Now, someone's going to ask me, well, where did you find them? The same place we found them before in what we call the visual watch list, by going to MarketWatch, by going to Visualize, and when we bring up the S&P 100, we can now actually see the stocks that are in the energy space. That's if we want a smaller list. If you actually say, look, I want a bigger list than that, then there she goes. So if we look at the S&P 500, all the examples are really, there's Oxy, where's PSX, and you're going to notice there's PSX, etc. And where's Valero? Right there. So I have the same list that you do. Can't say it was different, or he did a secret search. Nope. Now, what I want to do is I'm going to go back to Oxy for just a second, calling all technicians. Now, this trade, if we look at this, this kind of really looks like old resistance kind of being maybe like old support. Do you see that? Did anyone notice that before I mentioned that? Now, if we actually take a look at this old top area, it's maybe about 46, and the other top area right there is about $48. Now, if we take a look at this, if we zoom in, now if you woke up and saw crude oil up, if you woke up and saw, let's say, energy sector up, something in that area is probably moving to the upside. Now, if we take a look at this, you're going to notice that this morning there was a close above the high of the low day dot, or trade above the high of the low day, okay? Now, we could also see that we had the moving averages green, okay? Red candle, 1, 2, 3 days down, but then today gap to the upside and then trading above the high of the lowest, most recent red candle that I'm pointing to. Now, the investor might look at this and say, you know what, I'm trying to trade stocks above their moving averages, noted, trying to also see stocks that are bouncing and or breaking out. Now, if we looked at a visual script is close above the high of the low day, okay? Another visual script that's kind of telling us that we might be breaking out is we actually, if I take these lines off, you're going to see that we look at breakout. Breakouts are, again, different in duration of time. If we actually look at the orange line, that is a 10-day high. Think 2 weeks. The blue line, this is, again, a duration of time. What length of time? It's 20 days, okay? And the white grayish line right there, that is going to be, what is it? Survey says 55-day high. So if someone says, look, I struggle with seeing breakouts, well, you don't now. You don't now, okay? If all of a sudden we're hitting that 10-day high, then all of a sudden, and we're hitting it day after day, bang, 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 and we're just hitting it day after day after day. I mean, it just wasn't one day. That's my point. So what does that tell us? If we're hitting day's highs, that's a higher high. If we make the higher high, we could be making a higher low. Now, here's the deal. People get confused. They're like, wait, do you need a breakout and a bounce? No, either or. But can you be getting both? Yes. If the move is strong, sure. You can get a bounce and a breakout on the same day. Nothing wrong with that. Doesn't mean it's guaranteed more to go up. Of course not. Okay? It just says it's meeting the criteria. Now, what I'm going to do is, let me just read this question. Oxy with down 3 days in Cahold is the entry only on Cahold. No, that's what I just said. And you could have wrote that before I said that, okay? So the biggest actually thing is, if you get a strong move, you can get a bounce and break out together, okay? Now, what I'm going to do is let's go back to that first chart. So by the way, does this help you see the breakouts? Yes or no? Now, why did I do this? Because what happened is there's people that had more experience and they would say, hey, here's a breakout. The other person sees it and says, I don't see the breakout. One person with more experience actually says, I see the bounce. The other person says, I don't see the bounce. So this is trying to kind of be helpful in seeing those entries on bounces or breakouts or crossovers, but it also at the same time is as far as actually stop adjustments and so on. So the visual scripts, it can be helpful. Now, let's go back to the trade tab, okay? Now, what I'm going to do is on that, I'm going to bring up, let's say, Oxy, okay? Right click. And now what we're going to do is go, so we're on the trade tab, okay? Got an Oxy. Going to go actually right to buy custom with the OCO bracket. I'm going to click on that. Now, if we do with OCO bracket, it's with the intention we're going to have a stop, we're going to have a target. Click. Now, what I'm going to do in this case is we got to go back and kind of just do a quick analysis. So we're right there, okay, at this amount. And let's say, for example, hey, look, I'm not going to be willing to risk more than $500. Example given, okay? Now, let's also kind of say that, hey, I don't want to invest more than 5% of total portfolio. Well, that's going to really be about $7,500, okay? So those are kind of the metrics. Let's say we use those, said, I don't want to risk more than this. Every investment, I don't want the capital to be more than that amount. So let's go to work on this. Option number one, you could just type in that amount. If I said, hey, the capital amount, limit, 7,500, okay? We're now going to put that right there. It's going to be 167 shares. Once I know that, I can just say 167. Now, I'm going to go ahead and put a target there. If we go back and look at this and say, where's that potential target? Well, the potential target, if we went back to the standard chart, it's going to be right about on that first chart. If it went up to the area of resistance, it might. Now, we don't know. But if the investor said, James, I'm going to put my target right about $48. Now, if you're in anything energy, you're kind of hoping that energy prices go up in terms of crude oil and so on. Now, in terms of day to GTC, okay, on the stop, we're now going to look underneath and kind of say, where do we see support? Now, the nice thing about, let's say, the green dots on the bottom is we can kind of play a little game of dot to dot to dot. This is almost like William Fractal, okay? But instead of William Fractal looking at lows, we're looking at Cahold. So if I went dot to dot to dot, I get an angle like this. Or if I went dot to dot to dot, I really get an angle probably like that. So if we actually said, look, I'm going to set my stop underneath 42.5, where that diagonal line is, 42.5 less 3%. And that is really going to be, in this case, 41.22. Why 3, not 2? Anything over 50, we do 2. Support less 2%. Anything lower than 50, support less 2%. Now, what I'm going to go ahead and actually do here is we're going to come back in and set that stop. Now, remember how that stop works. We're saying if it goes down to that price or less, sell the position, okay? So we got 44.75 down to there. I want to also keep in mind is that if I said, what's the trade risk per share? 350 on 167 shares, it's really going to be about 584. So if we said, hey, wait, I didn't want any loss to be potentially greater than 500. Well, we would probably shave that down probably about 17-ish shares, probably push it down to 150 shares to try to make it where that loss is right around 550. Does that make sense? So that's the thing is you're taking, if you see that that risk is greater, just chisel down the number of shares. I can make a quick sheet on that on the spot, but I won't right now. Confirm send, and now you can rerun those numbers and say, is that fine? That's probably going to be pretty daggum close, okay? Now, I'm going to go ahead and send the order. Now, remember what the stop order is saying. If it goes to that price or less, trigger to sell it, okay? We don't know where it's going to fill. That's why there's risk. That's why, A, we set a stop, and 2, there was a capital limit on that. Send the order, okay? When you say, now, by the way, let me actually kind of go back to something. So let's say I said, hey, this looks like it's pretty high. How high is that? Well, let's take out the moving average envelope tape measure, okay? Now, one of the tools that actually we like is that right there is the 10-period moving average, no change. This right here, the yellow line is 3% above the 10, and the red line is 5% above the 10, and the yellow line is 7% above the 10, okay? Now, what's the investor's goal? Well, I mean, if you're asking us, we like to buy probably in between the 10-period moving average and that yellow line. Why? Because we're closest to support. Why? Well, because the potential risk would be less. Now, is it horrible if we're actually maybe buying above the yellow line or maybe no higher than the red line? Look, it's not probably the best scenario, okay? But again, my class was at 11 a.m. Eastern, so we had to go with it in this example. But if we take a look at this, if when we saw this, okay, I mean, we're right at the red line. If the investor is going to buy, they're trying to buy here, because if we're saying, hey, look, I'm buying 5% above the 10-day moving average, setting my stop 3% below the moving average line, that goes back to what we've said for a while, which is we're trying not to risk more than 8%, 10% of the entry price. That's not guaranteed because that's how the stops work. But if we buy 5% above and we set a stop 3% below the 10-period moving average example given, add those two together, it'd be 8%. We're trying to keep the losses contained. Okay, does that make sense? The moving average envelopes here give us a visual tape measure, if you will. How high are we percentage-wise above the 10-period moving average? That is in blue. Okay. All right, James, back to you as well. Now, just real quick, so if we go back to this, I want to kind of show just real quick other stocks that we're going to keep our eyes on. Now, one of the areas that's maybe trying to get a little bit of a push is AEP. Now, I won't have time to go over this, but I'm just going to kind of mention some stocks that are hitting some highs that we can visually see on the chart itself or on the market watch. AEP is trying to do a little reversal back to the upside after a pullback. Keep an eye on AEP. XEL, same space. Utilities. That is also a little reversal in the shorter term, same space. AEP showing a little bit more strength so far. EMR, same neighborhood. We're seeing this one is kind of more the continuation. Lots of basing, bottom of the bowl or the cup, with actually a little area of resistance, let's say right around 148 and change. If we said which one is actually being stronger in the utility space, it's really the EMR so far. Now, the one of them, if we actually pull up, let's say, ConocoPhillips, going back to energy for just a moment, that's another area that's trying to get a push. It has not been as strong as, let's say, Chevron or Exxon, but it is also on the right-hand side. Can you see the higher lows littered all over the chart? Where do we see those? Well, if these dots are actually getting higher and higher and higher and higher, those are higher lows. Those are, and if they are sequentially higher, those are showing higher holds relative to the previous one. So keep an eye on Conoco, which obviously there's some correlation between that and ExxonMobil. Now, the ones that I also want to just bring up, the last one is Mosaic is actually kind of showing a basing pattern reversal, getting above the 26. Its twin cousin CF is also in that space, kind of getting above that horizontal breakout. So if you like reversals, okay, Moss and CF are kind of there. And the last one I'm going to kind of make mention here is ADM. They're all Archer Daniels Midland. Those are that. If we said which one is kind of being stronger, it's really ADM. Similar neighborhood though, but this is kind of showing a continuation with a big pull on the right-hand side. So I wanted to kind of take some time and talk about current past positions, but then also talk about new positions, and then really chisel on kind of talking about the bounces and breakouts. So sometimes they can be showing at the same time. That's not bad. That's just more confirmation of the setup. And the other thing we want to really press upon your mind is visual scripts on the chart. Try to make trading life or investing life a little potentially easier. I'm out of my time here today. Stay tuned for our next webcast coming up right at the top of the hour. Thank you, Connie, for answering those questions in chat. And remember, I will post the script in the description as well for this video if you're watching recorded. Now, just real quick, remember with what we discussed, it was done for example, illustrative purposes only. Go out and practice these scripts. Does it help your trading become a little bit easier? Okay. And how could you actually work on defining routines to actually make your investing or trading more disciplined? So with that said, this has been Growth and Value Stocks. Stay tuned for our next webcast coming up next. Bye-bye.